Good afternoon. Let me fix that. Alright. YouTube should be good. YouTube should be good. Alright. Let's do it. Good afternoon, everybody. What's up, Nick? What's up, Bandit? Eddie Webb? Rose Petals in the house. Thank you, Bill. Hope everyone survived the day. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I got out of pins and into ARC. Out of pins and into ARC today. Kept a lot of ARC. Probably too much. We'll see. See what we got tomorrow. Yeah, so wild day today. I definitely made some mistakes and some bad calls today, to be honest. So kind of start with that. At the same time, I don't think anyone should be overly surprised by this price action. I thought that the highest probability situation today was some sort of stabilization. Either through an inside day with that gap up or through like an RDR on a day 3 here. I thought that the third highest probability situation was basically what happened, just a continued vicious sell-off, and that the least probability situation was like a big move higher. That's kind of what we discussed in the meeting. And the situation, which I did not think was most probable, but was certainly a possibility, happened, which is that we got, a continued sell-off. And the sell-off was pretty vicious in a lot of ways. And I don't think anyone should be surprised. I definitely made a couple mistakes today. I was too aggressive too early. I'm happy to go over that. And there was a couple times intraday today where it looked like we might reverse up at around 12:30, 1 o'clock. It looked like we might actually reverse up and still give that RDR. And I still thought that a green close at 12:30 today was very possible for the market. But I shouldn't be overly surprised about this either. Similar but different than yesterday. The gap up plus the opening price action satisfied the short-term tactical, and the correction continued. We've never gotten to $10 extension to the downside on the ADMA in this daily chart. I called from the beginning at the end of July. I said a pullback to 435, very very possible. August is seasonably weak. Bill posted a really good note about liquidity and seasonality and zero DTE at some point this afternoon that I suggest everybody take a look at, because that's the market dynamic fuel and information that is enabling this sell-off to occur. And for me, now that we're finally getting to 435 from the beginning has been the area that I've wanted to get aggressive to the long side. My game plan from the beginning, from the end of July, was, hey guys, I'm getting net short. I don't like the seasonality. I don't like the market dynamics. I don't like how the sentiment has adjusted. I don't like the push through failure negative Maribozu candlestick that we have at recent highs at the end of July in the S&P. And the game, and that I was more aggressive to the short side than I am normally. I was really aggressive to the short side up there. It worked out really well. I got out of most of my shorts at my targets, and then was just trying to be really patient on the building back into the long side. I said from the beginning, 435 area, when the market's trading at 455, it's very hard to call, if you think a pullback's going to happen, what that is going to be to the dollar. If the low of this down move happens to be 435 and 1 cent tomorrow, and then we get a nice snapback to 444 or something like that in the SPYs, which could happen, it would just be complete luck that 435 is the number that I've been pointing to, because 435 could be 438, It could be 432. It does not have to be exactly 435, but that's the area where I told myself after, being really heavy long for a lot of this rally and finally really piecing out of those and then eventually flipping short, it was a pullback to 435, which once again is only a retest of levels from June, very recently. That's the area where I would actually look to build back into my positions in a heavier way. And overall, I'm pretty happy with how I have traded this down move here in August, honestly, with the exception of today. I was too aggressive too early today, which I shouldn't have been. My own game plan this morning as we were gapping up, what did we want? What did we talk about in yesterday's afternoon meeting? Yesterday's afternoon meeting was we really want the gap down, right? We really want the gap down for the opening bounce trade and then to see if you can get an RDR off that and see what type of bounce you can get. We didn't get it. We got to gap up, and we gapped up to a really difficult spot. If we gapped up further, if we gapped up to 443, 444, I would have been like, this is a really big common gap up almost to the 80 MA in a market that's already broken down. We should look to short that. If we gap really down in a big way, I would have been like, all right, day 3, really big gap down with, short-term tactical was already in the green zone as yesterday's close. The oscillator was negative 72. I don't know if anybody has an update on where the, did Chris say it here? If we can get bond stability, we can bounce pretty hard with negative 77 oscillator from Kristen in the close. Yeah, so that's gotten even further oversold. Negative 80 is where things start to get really extreme. So we're finally starting to get there on the downside, but the way that they opened up this market today was really difficult. I couldn't get what I wanted on either side. It wasn't a big enough of a gap up for me to feel confident shorting because we easily could have bounced another couple dollars intraday off the open, and I didn't get the gap down this morning to look for at least the short-term bigger bounce. So it made for really difficult action, and it caused me to make mistakes. And they're mistakes that I shouldn't have made. I was too aggressive too early. What I got focused on this morning was, okay, well, the market's gapping up. It's not really what I want. But maybe, just maybe, some of these stocks, if they can be weaker off the open, some of those growth stocks that are really oversold and I feel like are finally getting to the area where they should be able to give some sort of real bounce, maybe those names can actually give me some RDRs. So I was looking for ARC to RDR, I was looking for Unity to RDR, maybe Chewy to RDR, though I never really looked at Chewy too much actually intraday, and a whole bunch of those ones that are really extended to the downside to see if they could actually do it or not. And they broke yesterday's low before the market did, and I jumped the gun and I bought some of those names back when the market hadn't even fully filled its gap yet. Like when I was buying ARC, and I bought, I bought ARC, I got stopped out, I bought ARC, I got stopped out, I bought ARC, and then I managed the position kind of the rest of the day from that point on, and I still have it, and I'm swinging it. That first buy, especially, I had an ARC, I took the buy back through the previous day's low, and I looked at where the Qs still were at that point, and I was like, oh man, the Qs are telling me that they can really move further, and therefore this ARC buy might be too much. My first ARC buy was, I put a buy stop, it broke through yesterday's low, which is 41.23, and I put a buy stop at 41.23, and that buy stop triggered for a lot of size, and so much size that I really had to make sure I had a very clean, hard stop loss in, which I did. And I got stopped out, and as soon as I entered the position that's in the first 5-minute bar of the day, I looked at the Qs, and I look at the Qs on their first 5-minute bar, which is selling, and I'm just like, I think I might be too early. And the market can continue to push these positions down, and if anything, these ARCs of the world are actually relatively weak at this point. I think I'm too early. So, I had to stop myself out, and then I tried it a second time, like off, I think off the opening low, and I got stopped out a second time, and then, somewhere, I think near like 40.80 is where I bought it a third time with the idea of a different game plan of actually giving it down to more like $40, which is the big daily level that I'm looking at in this name, and trying to find a way to actively manage the position and be able to average down as it approaches that $40. But I certainly jumped the gun on some of these names too early. I think that the market threw me off with the way that it kind of gapped up this morning. So I apologize if anybody followed me into some of those trades this morning and got hurt a little bit in it. I like to think I've had an incredible track record over the course of this calendar year. My P&L shows it for the year, but definitely not a perfect trader, and I made some mistakes today, and it just kind of is what it is. It's we all have ideas that are wrong. We all make mistakes. It's how you manage your risk in those mistakes that actually really separates traders. So that was kind of the mistake that I made earlier in the day. And then, it still looked intraday, especially these SPYs were so tight early on. When we rounded up here at about 12:30, I thought that was actually going to be it. And then we got this higher low here, and we were very focused on the VIX at that point, and the VIX gave a little bit of a lower high, or UVIXY did a little bit of a lower high, lower low, and I was like, all right, I think we maybe finally got it here, and maybe we can get the roundup into the afternoon session. And the same thing happened. The information that Bill gave us pre-market, and also the information that Bill gave us during the day on the adjustment of 0 DTE and how the evolving picture there is really affecting the market is just super important. Just scrolled up in the VTF and found it, so I'm going to reread this out loud. Some 0 DTE analysis that Bill K provided. Outside of the macro narrative, another factor that seems to be adding to the spot weakness in stocks is the dominant 0 DTE option flows that are buying puts expiring on the close from around 2:45 p.m. The theory is that fast money have switched from a buy the dip mentality to a sell the rallies until further notice, and they're using cheap one-day options to do it. With dealer gamma having now switched short, so that widens ranges, apparently for the first time this year according to Goldman's model, the 0 DTE put buyers are gaming the market maker positions and pressing the short into the end of the day. Previously, we had seen 0 DTE flows creating mean reversion, but now that seems to be going with the downtrend on days when the market trades poorly. It's just hugely important information on how the market is functioning, and the adjustment that we've seen here in August. That can readjust. That can go back to more of what we had seen throughout the year, but that's just kind of where we're at now. And if you combine that information just with the study of the market, the S&P on average pulls back 5% plus every 8 months. We had a pullback in February. This is just 6 months later from February. That was that one was 5% plus, but again, that's an average. This is not unusual. You combine some of that 0 DTE information with the technical information of this push through failure, and look, January to the end of July was the biggest up period in NASDAQ history. A pullback makes sense. This is not the end of the world. We haven't even pulled back to the full 5% yet. And that's what I was saying from highs. And maybe I'm wrong. Maybe they could overshoot this market down further. We could go down to 430 is a huge level. Wouldn't overly surprise me if we saw that. But from highs, I'm like, guys, the market rally that we've had, we're coming into August. Everyone's starting to get really bullish. The market dynamic information as far as positioning had entirely changed. We were studying the information about how the systematic strategies were 95.6% to the long side on a 3-year look back. If the VIX begins to uptick at all in conjunction with some weak August seasonality and low liquidity, we were set up for this move, and we called for it. So yeah, I didn't do a great job today, unfortunately. My P&L also shows for it in the same way that my P&L has really showed for it in the first half of the year or so. My P&L definitely shows for it on the downside today on the mistakes that I made, and it's fine, it's deserved, and I'm not upset about it at all because I put my trades on as I saw them in that time, and I feel like I managed my risk okay. And we're almost at 435. So let's see if we get the gap down tomorrow. Honestly, day 4 gap down tomorrow would be nice, and it would finally be into the level that I've been looking at. I mean, this is just a reasonable pullback to get to 435, or somewhere between 430 and 435. It's a reasonable pullback. We're looking for it. The data supported it. No one should be surprised. I guess I get it. It takes time to adjust. You get used to a bull market mentality or bear market mentality, and then the market changes. It's hard to flip. But we did just go through 2022, and there was a lot of this, like we're seeing right now in 2022, that was significantly more extreme than what we're kind of witnessing here. So we'll see. At this point, the market, 3 bigger down days in a row, approaching 435. We are $7.25. We're still not even that, we're still not massively extended. Oscillator at minus 77 means that we could get a bounce, but it's not minus 90. And SPY being $7.25 away from the ADMA certainly means we could get a bounce, but it's not $12 of extension from the ADMA either, right? What do the Qs look like? Qs at 358, ADMA's at 366, same deal. $8 of extension, $8 of extension in the Qs, and it's even less than that because the ADMA will have caught up a little bit further tomorrow. We might be not quite there yet, and if that's the case, again, I honestly started being more aggressive today, and I was too early. That's the first thing I kind of admitted at the beginning of this meeting. I started too early today. I'm keeping a somewhat aggressive amount of long exposure up, considering that I have the amount of long exposure on right now, and this maybe is just a continuation of that mistake, that I should have, really, if we're like at oscillator minus 85, minus 90, and we are, $10, $11 extended from the ADMA. So thank you, Dimitri. If we get to that, $10, $11 of extension from the ADMA on the daily chart, which at that point, that's when I will have supreme confidence in looking for a bounce. I'm going to be hurting a little bit at that point on the amount of P&L that I give back, simply because of today. Simply because I started getting a little bit too heavy too early today. Not the end of the world necessarily. I can endure it. We don't like to endure it, but I can endure it. We prefer for the timing and for everything to be, on par with excellence. But can't always be perfect with it. But you got to just kind of understand where you are within the market. And like Pat was saying, I'm not looking for a low to come in to bring me back to new highs on the year at this point. I think that if we do see new all-time highs this year, which, if you guys remember, when we were at QQQ 385, when it was still July, there were polls even in our VTF and all over the street that all of a sudden a very high percentage of people thought we were going to see new all-time highs by the end of the year. It's still not impossible, but if it does, it's probably like a October, November, December dynamic, not an August, September dynamic. I'd be pretty surprised if we caught a low at 455 tomorrow and then bounced to, caught a low at 435 tomorrow and then bounced to 470 off of it. I'd be really surprised. The bounce that I'm looking for is really a bounce to at least the ADMA on the daily chart for the indices. And then we'll take it one step at a time. That would just be an upside retracement back to equilibrium, which is standard. And then are we looking at a pivot high there to range out or work lower because we can't recapture any key levels? Or do we then create some sort of reversal pattern that enables us to get back above key levels? And we're starting to stretch too further for me to predict on that, because I like to take it one step at a time. But yeah, it's just kind of where it's at. I was too aggressive too early. I'm down a whole bunch of P&L at the end of the day. Not happy, but not, upset, because I understand risk and I understand what it means to be able to be down P&L, and I understand that sometimes for me, especially for the way that I approach markets, I at times almost have to give back some P&L in order to make even more. And I'm fine with that as long as I'm doing everything within the realm of my edge. And I could say that the aggression I had in ARC was actually outside of that this morning. I was too aggressive, too heavy, too early, and I paid the price for it in that name. It's my worst name on the day. And it's still okay. You know, I'll work my way through it. That's all I've got. I am happy to answer any questions that anybody has. Scrolling up here in the VTF, first thing from Mike L. Can you talk about buying the open and looking for a bounce in general? You mentioned you tried ARC a few times. How do you decide stop out and try again or average down? I had Unity on my radar at 950. I was scared to buy, but then at 10 a.m. I felt like I missed the entry. Yeah, that's a very bad market psychology dynamic to find yourself in, where you're too scared to pull the trigger at certain points, and then when you see an uptick that you're not involved in, you get upset at yourself that you feel like you missed your entry. That's a slippery slope to making some real trading mistakes. So you got to be careful about that. And like always, I think that the answer comes down to game planning. You know, and you know, my mistake was probably a mistake of game planning today. You know, I look at layers of probability when I trade, and when I took those first couple buys in ARC and got stopped out, and I was having like an aggressive game plan with size and tighter stops, as opposed to other times where I like to have a little bit less of an aggressive game plan and keep it very loose to be able to give it space to work and space to trade. I was looking at ARC in a vacuum. I was looking at the growth stocks in a vacuum. I wasn't doing a good enough of a job of looking at the market in conjunction with it. But you know, the bottom line on how do you decide is what is the trade that you're taking, and what is the game plan that you're building around that. For me, it was, you know, I'm looking at, in ARC in particular, day 3 to the downside. I'm looking at, you know, ARC trading at, you know, $41 or so, with the ADMA at that point it was even higher, you know, closer to 43 bucks. I got $2 of extension as this thing is finally approaching $40 support after going straight down from 50 to 40, which is a very large percentage pullback in a short period of time. I got very fixated on that working in my favor and being able to get that move to at least 43 bucks over the course of a couple day trade. And then even the market dynamics, you know, this is not a good week to be, you know, not only I'm ranting and getting off topic, not only is this not a good month seasonally, it's not a good week with the options expiration. You know, we're in the window of weakness, right, Bill? And we gotta get through this week. You know, maybe we're able to get the bounce tomorrow. Pat was giving some good commentary on that when he was on the radio into the close. I would actually feel more confident if this exact same setup was occurring and I was walking in on Monday. But it still comes down to the game plan. I got overly focused on a couple of these growth names and looking for that RDR. But how do I pick that? It was like, okay, I'm buying the stock through yesterday's low. I'm doing it with a buy stop with a lot of size, and then I'm putting my, you know, sell stop out at lows. And then, you know, finally when I realized I wasn't, you know, getting that immediate gratification, I needed to study the market a little bit further. I was like, all right, you know, what if I actually have a game plan where I can give this more room down to the $40 area, and instead of having it be like a, you know, one for all for none, it's going to rip higher and pay me a lot or stop me out, I can build into the position. And there was a whole bunch of times, you know, where, you know, even though I, you know, took those big couple losses, because I managed the position as per my game plan through here really well, at this high at 1 o'clock, I had gotten to just about break even in the stock. Still negative a little bit, but it was a really big recovery, and that includes the first couple big losses that I took, and then the third trade when I took it, I was out of the money on that for a little bit, but that was fine because I had a game plan that I was building in on, and then I caught this bounce. I was able to liquidate some stock into it. I had some bigger offers, a little bit higher, that would have been beautiful if I could have gotten them. I didn't, and it you know, It just is what it is. I can't dictate to the market what it wants to do. I can only control my actions in regards to it. But it's all about the game plan that you build around it. So if you're looking at Unity at 950 today, when it's extending, and I called this long out too. I think I was like, all right, the one thing I remember at Lowe's at 10 a.m. there was not enough names that had more of this volume profile that was a little bit more capitulatory with volume building and maximizing at Lowe's. That's what I wanted to see. I remember looking at Palantir. Oh no, Palantir did have that also. And this gave no bounce at all. That was total trash. There's a couple, I don't remember what I was looking at, that didn't do it. The arc volume, I want it to be bigger there. There's a little bit of an uptick, but it wasn't big enough. What's your trade? That's the first question. What's your trade? Your trade is high volume capitulation with extension on the 5-minute chart and extension on the daily chart as the market's in an area where you think it could bounce in conjunction with the 200-day, something like that. And you want to come in and put on real size there, then you got to use this as a stop loss. And then that's your trade, and you manage to that trade and around that trade as your the risk of that trade as the game plan works. And there's nothing to be scared of. You should never be scared of taking losses that are within your risk limits and within your game plan. It's fine and it's normal. What you should be scared of is buying a lot of size, knowing that your stop is supposed to be that low, not putting the stop loss in, and then finding the stock at $30.20 and you're destroyed on it and trying to figure out what you can do, but you're locked out of your system. That's what you should be scared of. That's what you can never allow to happen. But if you've got a trade set up and you like the risk on it, then you take the trade and you put your stop loss in and you game plan to it. You can't be scared of your entries if the trade setup is actually there, and then you can't have FOMO when you miss something. You should be a little bit mad at yourself maybe if you had a real trade setup and you didn't take. I actually think it's okay for us as traders to be hard on ourselves and to beat ourselves up a little bit. I know I'm doing it a bit today with some of the mistakes that I made, and I like to do that as long as it's within a healthy realm. You should never be mad at yourself for taking good trades that fail and stop you out that are within your risk tolerance. You're mad at yourself because you don't do that. You take bad trades outside your risk tolerance that don't work, and that's it. No FOMO. But I'm glad you caught the PayPal at the 10:45 candle. From Rose Petals, can you go over how you pick your profit targets? I'm not a swing trader yet, but when I plan my trades, I don't really have profit targets. I know why I'm getting into the trade. Okay, that's a great start. And I'm confident I'll get my risk covered. That's also good. But outside of that, I have a hard time planning for the reward. Sure. So the first thing I would say to you, Rose Petals, is it looks like you're T3 Trading Group trader. You should have access to a game planning class that I've created, and I'm going to suggest that you check it out, because that game planning class is where I go through the answer to this over the course of like an hour and a half worth of detail. And if you combine that with the candlestick class, the candlestick class is really a game planning class for counter trend trades, even though it starts with the very basics of what candles look like and what they mean. It gets the second half of that class really details game planning for counter trend trades. And then I think it's the very next class is the game planning class, details game planning for with trend trades. But I'll give you a quicker answer, here, and then you can watch the 3-hour answer on your own time between those two videos. When I'm choosing profit targets, the first question I'm asking myself is, what type of trade am I taking? And you can break down every single trade that there is in the market into a couple categories. Is it with trend, or is it counter trend or range based? That's it. Every trade is either a with trend trade, a counter trend trade, or a trade that's within a range. Depending on the answer to that, depending on what type of trade it is, that should dictate the greediness of your game plan for where you want your profit targets. I oftentimes, on with trend trades, won't really have a target. The target is infinity. And it might almost sound like a joke. It's kind of not. The target's infinity. you look at, I started trading with T3 in 2010. Apple in 2010 on a split adjusted basis was $8. Now it's $190. This has had a lot of ebbs and flows. It's probably just about impossible as a trader, maybe not as an investor, to be in the thing from $8. But sometimes you get trends that can really, really last for long periods of time. I mean, just eyeballing this chart. What about this trend from the COVID low to this peak here in 2020, where Apple went from $53 to $137? In my mind, just eyeballing this chart, and it looks like maybe there was a little bit of a pull-in that July of that year that might have been tricky. But in my mind, just eyeballing this chart from a distance, you can capture this entire move if you have a good with-trend game plan for reward maximization, or a large chunk of that move. So, the idea of having with-trend trades where your target is infinity is a little bit not serious, but it is serious, because trends can last for very long periods of time. They can last for longer than anyone ever expects that they will. And that's when you implement a trailing strategy. Trailing strategy sets you up for, if this stock wants to trend infinitely, that you can catch the entire infinite part of the move. But if you're going counter trend, if you were, I don't know, trying to short at any time over this period between, just real quick, between this, when this uptrend for Apple started in March and when this uptrend ended at the end of July, if you were going counter trend and you were shorting at any point in time, there was money to be made if you were selective and picked your spots and shorted Apple over the course of these months on the way up. There's a couple, real peaks that give some real pullbacks if you time that extension and the execution well. But inherently, those trades are set up to fail, unless you get a full reversal. And full reversals happen, but we don't want to bank on them. They're low probability. You're always, as a rule, better off banking on the trend that you're currently looking at continuing versus the trend that you're currently looking at not. So if you're going counter trend in any of these spots because it got extended to the upside, well, what are good targets? Equilibrium. Hopefully you're shorting when it's extended, and when you're shorting when it's extended or buying something when it's extended, all you can really look for is a snapback to equilibrium. What is equilibrium? It's the space between the 8 and 21 EMA. So for counter trend trades, 8 EMA is target 1, 21 EMA is target 2. Maybe hold small percent of your position just in case that retracement actually becomes a reversal. And that's why, going back to the SPY analysis that I just did, a bounce is going to happen in the SPYs eventually. I don't know when it's going to happen, but a bounce is going to happen in the SPYs eventually. And when it does, at this point, we're in a short-term downtrend here. I can't expect for anything more than a move back to the equilibrium area, which is why I was just saying, when the bounce comes, especially because August, September tend to be seasonally weak, I'm just looking for a move back to equilibrium. At that time, maybe this bigger picture trend, comes back in and reverses the small time frame trend, and eventually we do work our way back to all-time highs, but I can't bank on anything more than that. So I want to probably sell the vast majority of anything that I buy in the whole counter trend, if I'm able to capture it right on the extension into that area, and then keep a smaller percentage of that position just in case that retracement becomes a reversal. If that retracement becomes a reversal, you're no longer counter trend, you're now with trend because it reversed, right? You're buying stock here, it's counter trend, but if we get a full reversal, you're now with trend, and now you can look for infinite reward on that smaller piece. So I hope that helps, and encourage you to watch those classes. From Ben, hey Dio, I took both of your R call-outs at 10 and 10:40, and both times I got 10 cents worth of risk versus the low. 10 o'clock. 10:40. I had those call-outs. Those are good call-outs. How do you feel about these trades versus lows and when it entered? Yeah, I mean, if I called it out, it must be great, right? I'm just messing around. I got jokes today. My P&L is down as much as it is. The only thing you can do is have jokes. Yeah, I mean, these are good execution setups. 1, 2, 3, 4, 5, 6 bar down here on the 5 minute into 10 a.m. So time of day really dictates the probability of getting at least what's again a counter trend trade. It's a retracement to equilibrium. It retraced perfectly to the 80 MA for a snapback. Looks like your execution on it was really good. Stop loss is in. You get to bounce back. Hopefully you cover enough. And then the second trade here, when this volume came in on this bar with this tail, and now it's 10:35. So 10:35 dictates that there's a higher probability of a 15-minute retracement instead of a 5-minute retracement. And that's exactly what you get up to the 21 EMA at that point. So yeah, that's really good. My second question is about Chevron. We noticed the strength in XLE this morning. Yeah, Chevron is my second best name today. The positive P&L there pales in comparison to the red P&L on a couple of my names that I have. Is Palantir getting smoked after hours right now? Down 15 cents after hours. Ouch. My second question is on Chevron. We noted that XLE this morning was had relative strength. So I was watching those names for long. Chevron was the strongest, but it also meant it didn't give a good buying opportunity. It didn't give a good buying opportunity that I saw, like no inside 5. Yeah, and this pivot into the equilibrium here is very hard. It's very hard because it just like immediately snaps right back up. There's no little continuation hammer or inside 5 or anything there into that area that gives it to you. Was there a setup to get long this morning, or was it just difficult to capture? I think it was difficult to capture the move. Broadly. Just looking at XLE in conjunction with it. Yeah, I mean, everything I did in Chevron today was nothing new. It was just a management of the position that I was already in. So, yeah, looks tough. Thanks, Ben. AMC squeezing up for no reason. That's fun. Good stuff, Ben. Alright, popping over to YouTube. Ooh, Robert's got a lot for me. What's up, Sean? Sean from Omaha. Good to see you in there. Robert's saying it's an ideal RDR market for tomorrow. I agree. Derrick, would you be confident to trade Cisco? Yeah, I said in the morning meeting I was not trading Cisco today. We can look at it for you. At 9:24 before the market opened versus $54. I like the earnings. They were decent, and also together with today's market small opening gap up, my thesis together was retail is seeing market gap up that might create a bit of momentum to the upside, which might support short-term momentum to the upside as well for Cisco. I think you're overreading the importance of the market on Cisco off earnings would be the first thing I would say. I think this Cisco is going to be in a little bit of its own universe just off that report that it had. Also noticing oftentimes these daily breakout levels usually start moving a couple minutes before the open. I've noticed that too, and it makes it tricky to get stock sometimes pre-market. But you're buying at 9:24. Yeah, I don't hate your buy at all. The only thing I would say about it is I probably wouldn't go max size there. I probably would start with some stock, take a feeler with some stock, and then look for the bigger ad when the market actually opens at more like 9:30. But otherwise, I'm cool with it. It's on earnings. You get the good daily level here at $54. It's the spot that we mentioned in our morning meeting here as well to take a look at it. And, give a good opening pop on a good report. The market was indeed supportive in the very beginning a little bit. Actually, no, it wasn't. It was only supportive pre-market. But yeah, I'm all for your analysis with the exception of probably the market part. Lower risk, Class B style setup. Thank you. Yep. No problem. No problem. Back over to the VTF. The same way about the pivot into the 80 MA, just snap back. So I took Oxy into the 80 MA instead because it gave almost an inside 5, but the trade failed. This trade failed. Just not enough of a bounce to get your risk covered. Yeah, Oxy was relatively weak for some reason, unfortunately. which maybe is why it didn't bounce as much as Chevron did there initially anyway. Alright, gang, I think we pushed through a lot of information here in not the longest afternoon meeting in the world. But yeah, I think that was a good afternoon analysis of this market and kind of where we're at and how we're set up. Looks like we're trading a little lower here after hours, so see if we gap down tomorrow or not. We'll see. So have a fantastic night, everyone. Get some rest. It's Friday. It's been a long week. It's been a long week. When it was Tuesday, it felt like Friday to me. So get some rest. Tomorrow is going to be a day where you're going to have to bring your A game and be focused. So have a good night, everybody. I'll see you then.